Michael Saylor is beating Wall Street. Since MicroStrategy started purchasing Bitcoin back in August of 2020, the MicroStrategy stock went up. Okay, so the US dollar valuation went up. But the Nasdaq also went up during the same time, right? Technology stocks increased in value. Now, what's interesting is that MicroStrategy outperformed the Nasdaq. It went up more than the Nasdaq. And this is a massive feat. That's kind of counterintuitive. Most stocks actually underperform the index. So in other words, most profit goes to very few stocks. There are a few stocks that outperform massively, and there's the vast majority that underperform. So whenever you pick an individual stock, it's very likely that you're actually going to underperform the index because you have to be very, very selective. Just a few players get most of the gains. Now, MicroStrategy did outperform. What's interesting is, how did it perform relative to Bitcoin? Did it outperform Bitcoin? Did it go with Bitcoin? How did it develop since beginning of purchasing Bitcoin? In this video, we're going to look at all of this, right? We're going to look at the US dollar performance of MicroStrategy. We're going to look at the relative valuation to the Nasdaq since purchasing Bitcoin. We're also going to look at MicroStrategy relative to Bitcoin. So does it make sense to buy MicroStrategy over Bitcoin? Does it make sense to maybe trade in and out of those two assets? Now let's have a look at the data. Let's have a look at the different charts. And let's start out simply with MSTR, the MicroStrategy stock denominated in US dollars. What we see over here, the vertical line, that's when MicroStrategy started buying Bitcoin. And we can see before that, this was pretty much a dormant stock. Not much happened, right? It would simply just go sideways, sometimes crash a little bit. But then with the purchase of Bitcoin, the price did finally start moving, and it moved quite a bit, almost 900% from time of purchase to the all-time high. And then it crashed. Now, since the purchase, still the stock went up by more than 100%. It more than doubled, 120% gains. What did the Nasdaq do during this time? Again, we've got here the vertical line. This is now QQQ, which is a leading Nasdaq ETF. It went up from that purchase time to the top by 50%, went down then from those 50% gains, 26% from the top. Since purchase to today, the Nasdaq went up only by 12%. So a very, very different beast, right? A lot of gains are being concentrated around the MicroStrategy stock. Now, this is no big surprise because MicroStrategy is now very highly correlated to Bitcoin. And we are going to look at that relative valuation as well, because that's in the end the interesting question, right? Does it make sense to rather buy MicroStrategy or to rather buy Bitcoin? How are those two assets moving to one another? This here now, first, is MicroStrategy divided by QQQ. So how is MicroStrategy doing relative to the Nasdaq? And again, no big surprise, a massive outperformance with afterwards quite a bit of a crash. So of course, when you move your existing Nasdaq ETFs to MicroStrategy stock, you do introduce volatility to the portfolio. So moving all of that capital into MicroStrategy will create all kinds of waves. And the question is, can you really withstand those waves? So this is where risk management comes into play, right? If you take out, say, 10% of your Nasdaq ETFs and you allocate this to MicroStrategy, you might have introduced more risk, more volatility into the portfolio. So instead of taking just that money directly into MicroStrategy, what you can do is you can split that money up, right? You take it off of the Nasdaq ETF, then you take parts of those proceeds, maybe put them into gold, something very, very safe, and the other part into MicroStrategy if you want to keep the overall risk exposure of your portfolio the same, right? Because simply you introduce so much beta, so much additional volatility into the portfolio. Now, let's look at MicroStrategy relative to Bitcoin since the Bitcoin purchase. And let's zoom out maybe even a bit further. Let's take the 2-day. You can see in the very, very early days, of course, Bitcoin outperformed MicroStrategy quite a bit before Bitcoin had been purchased, right? Because simply Bitcoin went parabolic from those few cents to the thousands of dollars. So no other tech company was able to keep up with this. But since the purchase of the Bitcoin, again, the vertical line here, we see a quite nice sideways trading range with not too much volatility, right? We had a short-term outperformance of like 130% here. This is when there was no real Bitcoin ETF, when basically MicroStrategy was more or less the only way for traditional investors to get exposure to Bitcoin and to crypto in general. That then succeeded, right, with ETF launches, with Grayscale, etc. And now we are pretty much in a sideways trading range, and we are at very, very similar prices to when MicroStrategy just started purchasing Bitcoin, right? So this is interesting in my opinion, because it means it seems to still make sense to purchase MicroStrategy stock if you can't directly get exposure to Bitcoin using, for example, a 401k, right? If you've got a retirement account and you want to have parts of that allocated to Bitcoin, but you can't buy Bitcoin directly in the retirement account, you could potentially get some exposure to MicroStrategy. And even though you do have some additional risk and it's not 100% correlated, the correlation is large enough. It seems to somewhat hover around an equilibrium, and this equilibrium seems to be very close to when MicroStrategy just started buying Bitcoin. And so let's look at Bitcoin relative to the Nasdaq, right? This is since MicroStrategy started buying, and again, a very nice outperformance of Bitcoin, which in my opinion is not really a surprise, because technology stocks tend to be more affected by the interest rate hikes, right? The idea is that when you increase interest rates, that you have to discount future cash flows more, right? So a stock in the end is nothing else but the sum of the cash flows that the company will generate in the future. And if you get the money today, it's worth more to you than when you get that money, say, 10 years from now, right? Because of inflation and because of risk. So you have to discount those future cash flows with some kind of rate. And the further it's out in the future, the more you have to discount it, right? When it's maybe 5% of a discount rate, then in 5 years from now, you would take 1.05 to the power of 5 and divide that cash flow by that number. When it's 10 years out from now, still with the same interest rate, you would take 1.05 to the power of 10 and divide that cash flow by that number. Now, when you increase interest rates, it doesn't just become 1.05, it becomes maybe 1.15, right? When it's increasing to 15%. So the higher the interest rates go, the more you have to discount those future cash flows. And tech stocks tend to have the majority of their value far out in the future. The idea is that tech stocks grow with time, right? They outgrow the rest of the economy. And so all of this value comes maybe 10 or 20 years or most of the value. And so when you increase interest rates, you have to discount the bulk of the technology stocks values more. And so the Nasdaq is more vulnerable to interest rates increases. When you see interest rate hikes, you will see that the Nasdaq underperforms the S&P 500, and vice versa. When the interest rates go down, then the Nasdaq outperforms the S&P 500. Let's actually look at this, right? It's a bit of a tangent, but why not? Let's look at the Nasdaq relative to the S&P 500. And this is what we see. Since the interest rate hike started, the Nasdaq underperformed. 20% here from top to bottom, 20% or 15% from top to the current prices. Okay, so this is not just the Nasdaq, right? The Nasdaq in itself just looks like this, but when you divide the Nasdaq by the S&P 500, you still see a relatively similar chart. Simply because you have to discount all of those future cash flows. And Bitcoin potentially is not that much correlated to those interest rates. Of course, you also have monetary tightening, and when there's less money floating around, this does have an impact on risk on assets. So there is some kind of correlation between tech stocks and Bitcoin. But still, I don't think that it's the interest rates that do this. It's simply just because there's less money available that people can just speculate with. And Bitcoin still is more volatile, obviously, than stocks, as we've just seen. So this is the overall picture. If you are considering getting into MicroStrategy and you do this as a way to allocate to Bitcoin, it seems to be somewhat of a safe bet. You seem to get somewhat of the Bitcoin exposure simply because Bitcoin is now so much levered. MicroStrategy is now so much levered on Bitcoin. So it seems to work relatively well. The correlation works pretty well, and there is somewhat of a trading range. And if now MicroStrategy, for whatever reason, suddenly crashes relative to Bitcoin, right, maybe because it's not adjusting to Bitcoin's price movements as quickly, then it might make sense to even allocate more to MicroStrategy versus Bitcoin. But simply just as a vehicle to get Bitcoin exposure, this seems to be valid. There does not seem to be an underperformance of the MicroStrategy stock relative to Bitcoin. This is different to, for example, the Grayscale Bitcoin Trust, right? Let's look at GBTC relative to Bitcoin, right? Relative to BLX. This looks way, way worse, right? So don't buy the Grayscale Bitcoin Trust if you want to get Bitcoin exposure. Rather buy MicroStrategy. This seems to be the better bet. There is another video that discusses these interest rate dynamics, right? So the discounting of cash flows and how this actually impacts the economy and general stocks. If you're interested in that, feel free to check out this video that comes directly afterwards. So I will link this here somewhere. And on another note, you can also check out the Telegram group and the Discord channel. The Discord channel has just been opened, so it's still very small. Looking forward to see you there. I'm there several times a day, so if you've got any questions, right, simply ask them over there. Looking forward to see you there and see you also in that next video. Bye-bye.